Okay. Hi everyone and Assalamualaikum warahmatullahi wabarakatuh. My name is Nurmazdiza binti Musa. My matrix number is 06D8023F114. So today I will be presenting about case 3. Okay. In this case, our firm earn about RM 1.4 million per year, and one of the main client is company A, which pay 50,000 yearly for audit and tax work. Later, company A faces cash flow after one of its customer went bankrupt. So they asked to pay our fees by installment over 10 months. So at the same time, they need audit financial statement quickly for their bank loan, and we promised to finish their loan on time, their audit on time. So because of work pressure, the partner did not review the audit plan properly and just sign it off. So it was later that found company A still owed 25,000 from the previous year. So the main ethical issue here is the threat to independence, because the firm depends on financial of company A and accept delay payment, which might influence the auditor judgment. Okay, after looking at the situation in the case 3, let's talk about the ethical issue that actually happened. Okay, which is the ethical problem from case 3. Okay, so the main ethical problem in the case 3 is the threat to auditor independence caused by unpaid audit fees and pressure to finish the audit quickly. Okay, the client still own 25,000 ringgit from the previous year, and payment will only be made after the current audit. So this creates a self-interest rate where the auditor might be influenced to give a favorable opinion to secure the payment or maintain the client relationship, which is the relationship between the auditor and also the company A. Okay. Besides that, the partner lead involvement and the firm providing both audit and tax services also can create self-review and familiarity traits. Overall, this issue weaken the auditor independence, objectivity, and also the integrity in audit process. Okay, now let's move on to the affected parties involved in this case. There are 6 main parties affected by this situation. Okay, first is the audit partner and the audit firm, which is they face a serious independent threats because of the unpaid fees and close financial link with the company A. This can also harm their professional reputation if not handled properly. Okay, the second one is company A, which is the client. They depend on the audit report for a bank loan. If the auditor is not independent, the report might be misleading. Okay. The third one is the bank. The bank relies on the audit report to decide on the loan. If this report biased, the bank could make wrong financial decision. So, fourth, shareholders of the company A, which is shareholder, use a financial statement to judge of any company performance. A biased audit can mislead them and cause loss of trust. Okay, then fifth is regulatory and professional bodies such as MIA, which is National Institute of Accountant, which is any ethical issue by auditor affect MIA's reputation and the credibility of their profession. And the last one is the public and other stakeholder, which is if auditor lose independent, public confidence in financial reporting will drop and can reduce the trust in business overall. At the Okay, so next, as we can see on this slide, we have explored possible solution. So there are 5 main possible solutions that we have on this slide. So first is request company A to settle all the outstanding audit fees before continuing the audit or escrow the outstanding fees. Okay, second is resign from audit or issue modified opinion. Okay, so next is disclose fee arrangement to the board or audit committee. And the fourth is appoint the independent partner to review audit work also. And the last one is segregate the tax and also the audit teams. Okay, so for the next slide, I will explain more about these possible solutions. So, on this slide, I will explain the 5 possible solutions for this case. There are 5 solutions, so I will explain to you one by one. So, the first solution is require immediate payment or escrow for outstanding fees, which is ask for immediate payment to escrow the settled fees. This remove the self-interest rate and also restore the independent though it may affect client relationship. So second is resign from audit or issue the modified opinion, which is if the independent can be restored, resign or issue a modified opinion to protect integrity even if it causes financial loss or delay. So the third one is disclose fee arrangement to the board of audit committee, which is disclose the fee issue to promote transparency and build trust, but the independent trade still remains. Okay, the fourth is appoint an independent partner to review audit work, which is have another partner to review to improve the quality and also the credibility, though it does not fix the unpaid fees problem. So the last one, we have segregate the tax and audit teams, which is separate tax and audit team to reduce the self-review traits. It support ethics, but financial dependency still exists. Okay, so lastly, I will explain the best solution for this case, which is as stated in this slide. The question is select and justify the best solution. So for me, personally, I choose the best solution is solution 1, which is to require immediate payment or escrow for the unpaid audit fees. This directly solves the main ethical issue, which is straight to auditor independent caused by the Rm25,000 ringgit unpaid fees. By asking for full payment or using an escrow account, the firm remove financial pressure from the client and also ensure the auditor judgment stay objective. It also help maintain public trust and show that the firm value ethics is more important than profit. So even if the client relationship affected, this action can protect their integrity as auditor and also the reputation. So I choose the best solution is solution 1 for this case 3. That's all from me. Thank you.